Welcome back to the channel. As always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called the Occidental Petroleum Corporation, ticker OXY. Very famous stock in the energy sector, bought by Warren Buffett a few years ago. And as you can see here, since the beginning of the year, it has had a phenomenal run, which is primarily due to the conflict in Iran, which made oil prices skyrocket. And as we can see, this has been a major victory for the stock, which was trading somewhere around $40 and reached a peak of 66, currently trading at around 55. Well, when we look at the actual numbers behind this, one of the reasons why I started looking at this is because the elections, the midterms in the US, will be taking place in November this year. This war has been deeply unpopular for the American people, and Donald Trump will no doubt be looking to come to a resolution on the conflict ahead of the midterms because he knows his reputation has suffered greatly because of it. So one of the things that we can uh, bet on with a decent degree of certainty in the months ahead is that the likelihood of a conflict coming to an end will likely increase over the coming weeks. So because of that, we have to look into what would happen to the stock. Because when we look at, for example, what's been happening with it from the perception of the analysts, you can see here that the ratings of the stock have skyrocketed, of course, as the stock has. But when we look at that performance, right, which started rising around mid-March, that is about the time that the stock actually peaked, and it has been going down and sideways for a few months now. As a matter of fact, this recent bounce back that we saw here was because of a revival, right, of the conflict. And even that, even though there were renewed hopes for a deal to be reached, it has been dropping a little bit, but not much. So when we look at what lies behind the numbers, it seems to me that there is plenty of downside when we look at this operation. You see, even with everything that's been happening, the stock has had, yes, okay, numbers in terms of revenue, but they were coming from a negative base. And what's worse is that going forward on the fiscal year 2027, the revenue will shrink by double digit, which is definitely very bad, and will stay flat after that. More importantly, EPS, which has already peaked in the earnings report that just came out, will be shrinking and going back to previous levels to remain stagnant and constant. There's actually 2 years of negative performance for this company going forward. And when we look at, for example, how that translates in EBITDA, you see the uh, chart here, right? Going forward, it's decreasing. Yet the street are not only telling us that the price target is 65, and analysts are even upgrading their price targets for it. So to me, those fundamentals do not really make sense on paper. But we have to look a little bit deeper into what's really going to cause that situation. Because we're assuming here that the war will come at an end, right? And the price of oil will decrease. But in reality, there's more to that for a business like this. So when we look at the quality of uh, their business, right? This company has the highest break-even cost of the remaining inventory in Morningstar's North American coverage. So when we look at the margins, they're very exposed to the uh, to the falling price of oil because it's very expensive for them to pump all the oil. It's a lot more expensive for them than to uh, the other energy companies out there. And on top of that, they have this plan for 2030, which is all about using cash for capex avoidance from decline rate reduction. Most of it is not operating earnings. So free cash flow improves, but EPS does not, and multiples are paid on EPS. The other thing is that as of today, when we look at this market and the recent earnings season that we've had, what we see is that the AI trade is becoming a lot more selective. There's a lot of AI theme names out there that have not recovered after the sell-off we experienced in the following weeks. Excuse me, in the previous weeks. But some of the energy names dedicated to the AI are actually doing quite well. So the AI energy basically flows to gas, power, and midstream. That's where the money is flowing in, right? But the crude name in the peer is overall negative. That applies not only to OXY, but also companies like BP, Shell, Chevron. The other side is on the gas and midstream, you got Halliburton and others, where you do see that positive performance. So in other words, I see a very strong chance that the market will be plowing money into those names and using OXY to pay for it. So this trade, as of today, is something that we could put on. It could also be on a watch list because I think that uh, there will be likely some more tensions over the coming weeks that might lead to the price increasing a little bit again. That is likely the point, right? The price point somewhere perhaps around $60, where it would make sense for us to get that short exposure with a price target of probably 50. So that's it for today. Hope you enjoyed the video and see you soon.